Hello, everyone. Happy Monday. Today on the Final Bar, we'll talk about this market following through on the strength from Friday, continuing to push to the upside. The FAANG sector's leading the way again today. Ladies and gentlemen, this is the Final Bar. Hey, everyone. Welcome to this Monday edition of the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets. Using the power of StockCharts, the technical toolkit is optimized to help you try to make sense of things when they seem challenging, when they seem unintelligible, because the beauty of technical analysis is that it's focused on price action, right? And price arguably reflects what investors are thinking, what they're seeing, what they're reading, and most importantly, how that has manifested itself into their actions, right? Into the price behavior that we're able to measure through analysis of trend and momentum and breadth and all the other tools that we bring to bear. We'll talk about the strength that we saw at the end of last week. Friday's show, we focused a lot on the signal that was embedded in the fact that Friday was so strong into the close, when earlier in the week, we'd sort of weakened off and softened up into the close. Further upside to be had today. We're heading into the Fed meeting next week. We've got a ton of earnings to try to make sense of. At the end of the day, the market keeps going higher. Let's go right into our market recap. Let's talk about what actually happened today. Let's connect today's movements with the big picture. We're looking at the S&P 500 here on our market dashboard, and you can see the S&P closed around 4020. That's above that key 4,000 level, and we're going to check the chart of the S&P, but I have a feeling that we might have gotten above that trend line I've been talking about for quite some time. So let's take a look here in a minute. But for now, the S&P finishing up 1.2%. The NASDAQ really showing the strength from Friday, continuing it into today with the NASDAQ composite up 2%. Mid caps and small caps all up as well, but it was really tech and then everything else, or the growth sectors and everything else behind there. This move higher in stocks coincides with volatility lessening. You see the VIX back below 20. Now, that was an interesting sort of side theme last week, was the fact that the market was chopping around, volatility was creeping back upwards. Now it's sort of back below that 20 level. That 20 level is sort of an interesting level to pay attention to if you look at what happened in the last couple of years, right? Particularly in the end of 2021 into 2022, when 20 was essentially the floor for the VIX. Looking at some non-equity asset classes, we have interest rates overall moving a bit higher through the course of the day here. Bond prices down. The TLT was down about 0.5%. Dollar index, no real change here. So again, it's generally speaking, higher rates are not great for growth stocks. Lower rates tend to be better for growth stocks. However, you have growth working and rates going higher. So it's not a one-to-one ratio by any means, but overall the trend tends to play in that way. So in this case, we actually have bonds down and growth stocks up. Gold chopping around and finishing just barely in the positive, but silver actually down for the day. Commodities sort of a mixed bag, with the DBC, which is a broad commodity ETF, up just a little bit above the zero level. Natural gas prices actually spiked pretty good. Depending on how you measure it, the UNG was up about 7+%. Natural gas futures up a little more than that when I checked a little bit ago. So you're certainly seeing a renewed strength. Now, natural gas is a pretty volatile market with a lot of choppiness. So for what it's worth, I would just say some differentiation within the commodity space today. Cryptocurrency is essentially flat if you look at today, but the big moves over the weekend with Bitcoin now around 23,000, Ether above 1,600. We're going to look at a chart of both of those here in a few moments. Let's start with a chart of the S&P 500, though. And I had mentioned this trend line how many times, right? Many, many times. I'm sure you're getting sick of it. And I'm getting sick of pointing out that same exact line, but I'm not getting sick of it because it's been such a beautiful visual representation of this downtrend, connecting the highs from January 22, March 22, August 22, line up almost perfectly. And that lines up beautifully with November and December. That also lined up with about a week ago when we tested this line, pulled back to the 50-day. And as of today, we have closed above that trend line for the first time in basically forever, right? We basically got above there in March, just narrowly, but overall, this is potentially a big signal, I would think, getting above this trend line. Now, when you have a break of a trend like this, it's all about the follow through. And if you think about what happens a lot when you have support or resistance levels, you'll have that initial break, and either you'll break through that during the day and then close back below. That's what actually happened in the second week in December. We opened here, traded just above the trend line, but then closed back below it. Or you close through it, but then you don't follow through the next day. Follow through days or follow through moves are really important in my toolkit, because that's a way that you try to minimize whipsaws, meaning it seems like you have a certain signal, but then there's no validation, there's no qualification. So a number of people that I've, what I would consider thought mentors for sure, and thought leaders, people like Tom DeMark, Larry Williams, even John Murphy had a 2-day rule. They all have sort of this concept of follow through, right? So you have a signal, then you have to confirm it with something. And so for me, tomorrow, I think is critical to see if we follow through on this close above 4,000. So as of today, we closed above 4,000. We're above that trend line resistance. That's all really powerful. Further things I would want to see to validate it, I would say 3 things that come to mind as I'm looking at this chart. Number 1 would be a follow-through day tomorrow, right? Do we sort of continue and show that today was not just a fluke and a big spike in growth stocks, and then it all dissipates? Number 2 would be the RSI can get above 60, because that's more characteristic of a bull market phase when you have the momentum moving higher than that sort of normal peak in a bear market phase, and we're right there as of today's close. Then the third one, of course, getting above the December high, right? That high around 4,100. Getting above that would certainly, I think, no doubt complete that rotation to more of a bullish phase. At this point, though, given the fact that we've closed through that line, I would be inclined to give the benefit of the doubt to a breakout, just given the strength that we're seeing, and not just the strength on the chart of the S&P, but the inswell of strength that you're seeing in a lot of different names and a lot of different sectors, which we'll talk about here in a little bit. I wanted to look quickly at the chart of a couple charts of cryptocurrencies, if we could. We'll look at the chart of Bitcoin. Again, what's interesting about cryptocurrencies, of course, they trade 24 hours a day. They trade over the weekends, a little different than a lot of equities. You may be in ETFs if that's sort of your area of focus, which for me, it certainly is. When you're looking at the chart of Bitcoin, what strikes me, taking a step back and looking at the last 12 to 15 months, after we peaked out just below 70,000, which I talk about a long time ago, I think in many ways, right? You've seen this consistent downtrend. I have these series of green lines showing these attempts for Bitcoin to revert higher, where you have a new low for the cycle, and then you have a higher low, and you connect those with the trend line, and then soon after you broke. And you found that once, twice, 3, 4, 5. I didn't draw this one, but you could probably make that a 5th one. And so you've had 5 times here in the last 12 months where you've done that, where it looks like you've made a low, you make a new swing low, then you put in a higher low, which is sort of like Charles Dow theory, basic charting 101, that, a higher low is potentially the beginning of a reversal. A lot of the toolkit is built off of that, but it failed, right? These upswings would fail, and they ended up being more bear market rallies. The difference is, can we have a rally and not break that trend line? And we might have done it here, right? If you look at November into December, clearly making a new low in December, making a higher low in December. From there, we've really rotated. And the fact that we've gotten above the 200-day moving average, above 20,000, which is a big round number, all pretty meaningful. What's most encouraging to me is the fact that we've now followed through, right? So after that break, we're actually continuing to push to the upside, showing that it's not just a fluke, not just a short-term thing, but it seems like more building upside momentum. Now, you have to be careful about a chart like this, because we're in a condition what's called extremely overbought. When the RSI is above 70, that's overbought. That usually means the market's gone too high too quickly. You often have a bit of a downside, a mean reversion when you have that sort of scenario. But when you become extremely overbought, that usually means the opposite. It usually means the momentum is so strong, you most likely have further to go to the upside. It does not always work, but that's the general condition that I would observe here. And in my previous role, we used to call that the good overbought, right? When it's so overbought, it's no longer a contrarian negative. It's more of a trend following positive, that there's so much influx of momentum here that more likely it's going to go overall net more positive. Now, Ethereum, similar sort of chart in that it's put in a higher low, similar in that it's rotated higher. Bitcoin had been in a little more of a downtrend during this 12-month period that we're looking at here. And with Ethereum, we're actually facing a previous resistance level, right? We got above the swing high in December, which was meaningful. That was just above 1,300, call it 1,330, 1,340. Now we're at the November high, which is right around 1,700. We get above there. That sort of completes that rotation, I would think. And overall, again, benefit of the doubt, I would think is positive. And when you think about more upside objectives, which talk about things we haven't talked about in a while, is cryptocurrencies and upside price objectives. But 2,000 is an important one, in my opinion. It's a big round number, and a lot of time cryptocurrencies have tended to rotate and gravitate toward those, tend to be key pivot points. You can see the August peak, which is a pretty big one coming off of the June low, is right at that 2,000 level. So I'd be looking there as an upside objective for now, but we'll see if that trend can continue. Constructive moves so far. It's all about growth today. You can see tech, communication services, consumer discretionary at the top of the list. I'm impressed certainly by the action we're seeing in some of the FAANG names. Semiconductors certainly continuing to show some signs of strength here. I was looking at the chart of NVIDIA before we went live, potentially completing this beautiful head and shoulders bottoming pattern, or an inverted head and shoulders pattern. That's where you have a low surrounded by higher lows. You connect those swing highs with a neckline. We've gotten above there today. So again, tomorrow I think is vital to see if we get follow through. But at this point, NVIDIA showing this sort of reversal pattern seems really encouraging to me. And it's not just NVIDIA, of course. If you look at semiconductors as a whole, you can see the fact that you have these sort of same inverted head and shoulders patterns. And again, with any of these, you make a neckline connecting the previous highs. We broke above it when we got above 230 today after pulling back from that same level last week. So I'm seeing signs of encouragement in an area like that. Final thing, healthcare. And I would tell you, even though healthcare is not the number one sector, there are charts like IDXX, IDEX Laboratories, HCA, Mettler Toledo, SYK Stryker, all with some really constructive patterns. So, boy, after a weekend, I'm coming back looking at the charts with fresh eyes and seeing a lot of signs of encouragement if we can follow through on the rally we saw today. Let's take a quick commercial break. We'll be back answering your questions from the Final Bar mailbag. We'll see you in a minute. Hey, everyone. Welcome back to the Final Bar. It's so good to be back with you here on a Monday, and we appreciate you tuning in every weekday after the close for our show. A couple quick announcements before we start answering your questions from the Final Bar mailbag. First off, those questions all come from people like you over the last couple days. Keep the great questions coming. Our email is thefinalbar@stockcharts.com. We're on Twitter @FinalBarSCTV, and we're on YouTube. Make sure you subscribe to our YouTube channel and put a comment below the video you're watching there. We'll hope to answer one of your questions in our next mailbag segment, end of this week. Go to StockChartsTV.com. That is our on-demand platform. We had so much fun doing our market outlook special called Charting Forward 2023 that featured Mish Schneider, Greg Schnell, and Tom Boley. We had a fantastic discussion about a lot of things: commodities, value versus growth, interest rates, the Fed, with a focus on the technical implications of all of the above. Go to StockChartsTV.com to access that special, among many others, or on your mobile device, just search for StockCharts TV on demand. Upcoming schedule, we've had some really good guests in the last couple of weeks here in the new year. We're really excited about what we're doing with this show and bringing on some really good conversations. This week, 3 good guests for you. On tomorrow, the 24th, Tuesday, we have Willie Delwich, who's the strategist at All Star Charts. Wednesday, the 25th, Katie Stockton, founder of Fairlead Strategies and manager of the TAC ETF, will be coming through. On Thursday, January 26th, David Hunter, the contrarian, one of our more controversial guests, tends to bring some really big deal price objectives to the upside and downside. It'll be interesting to hear his take in the new year and see what sort of levels we could tease out of that conversation. Also, just to let you know, I have my next webcast with market misbehavior coming up tomorrow on Tuesday, the 24th, 1 o'clock Eastern, called the Morning Coffee Routine. I'm going to share with you the charts I look at every single morning. I will share with you why I look at the charts that I do and what order and why that's so important. And I will challenge you to think about your morning coffee routine. You get the coffee, you sit in front of your laptop. What do you do next as an investor? I bet there's some places we could tweak and improve that process. So join me for that event. Go to marketmisbehavior.com/coffee to sign up for that free event tomorrow, the 24th. Let's continue on our show today with the Final Bar mailbag. And let's get to question number 1. Dave, I have downloaded your Mindful Investor chart pack, but the changes, lines, and notations never seem to update on my end. What gives, Keller? Here's the thing, right? So there are a number of ways that I can share charts with you, and there are 2 ways that I think you can get to it. So I have what I call the Mindful Investor Live chart list. I don't think that's what you're talking about, but if you see this, maybe it will help you along. If you go to your dashboard, if you're a StockCharts member, go to chart lists. That's actually not true. Forget what I just said. Go to articles. Sorry, go to articles. Go to my blog, which is called The Mindful Investor, which is right here. And if you see, there's this gray button that says Live Chart List. So it's really cool is they've allowed people like me and some of our other contributors to create and manage these chart lists that anyone can access, right? So if you go to this URL, if you remember it, or again, just go to our blog page and click on the live chart list, you'll get this list. Now, this is a list that I keep updated. So any tweaks that I make, you're going to see them. If I put notations on here, you will see them. I don't do a ton because I try to keep these relatively clean so that when I show them on the air and we look at them together, they're not cluttered with a bunch of stuff. But if I make changes to them, you're definitely going to see them reflected here. Now, I think what you're talking about is what's called the chart pack. So I have another thing called the chart pack. And if you click on chart lists, you're going to have your list of charts. If you go to the very bottom, I have way too many of these. I have to clean them up at some point, but I like to keep them just because. If you go to the bottom, you see this gray button that says Manage Chart Packs. And if you click on that, you will see David Keller's Morning Coffee Routine Chart Pack. So this, if you install it, actually installs 12 different chart lists and 4 different chart styles into your login. It's a really good idea if you're just getting started and you want to see how some of the experts, the power users of StockCharts, actually set up their chart lists and what sort of things they look at. You can get to them here. You can see a number of these are free. Some of them are premium chart packs that you would need to pay for. But no matter what you do, you hit install and it'll put them in there. Now, if I make any changes, you will see this little blue button. So I actually haven't refreshed mine here because I have a way to tell StockCharts what is going to be included in that chart pack. And if I make any changes, just go here and say reinstall and you'll get the newest version. But that's really more intended to take this list of charts and then make them your own, right? Change the colors, change the schemes, change the data, whatever you'd want to tweak to them. You can start with my morning coffee routine and then start to make it your own. And I think that's maybe what you're asking about. So that's not designed to capture my thinking. That's more designed to give you a set of charts to work with. Thanks for that question, by the way. And let's get to question number 2. Why would someone utilize the same moving averages, for example, the 20-period and 50-period moving average in multiple timeframes, as opposed to adding longer moving averages to the same timeframe? I actually had someone just ask a question about this recently. So I'll show you what I think you're asking about. And I'll explain the situation. So UNH is United Healthcare. I just brought that up. And when you type a ticker here at the top, it's going to use your default chart style. So I have this particular chart style with the 2 years of daily data with the 50 and 200-day moving averages, RSI, relative strength. And I have this saved as my default chart style. So first, if you don't have any chart styles like this, set up a chart how you want, click Add New, and then you'll give it a name, and then it'll appear on this list of charts. And you can also go through and set them up as little quick buttons on the side here. Find the one that you want it to always bring up and then say Save as Default. And what that means is when you just type a ticker, it's going to start with that chart. This is the one that I like to start with. And then I have other chart styles if I want to dig deeper on different aspects of what I'm not particularly showing here. Now, what you're hinting on is if I change this to a weekly chart, I'm basically saying I want the same chart. I just want to change the period. So now that I'm doing a weekly chart, I'm now looking at a 50-week and 200-week moving averages. I'm looking at the weekly RSI, and I'm looking at the weekly relative strength of the stock versus the SPY. I have found that rarely is that what you probably really want to do. What you want to do is have a daily chart with the 50 and 200-day moving averages like I do here, but then you might have a weekly chart that has something like the 40-week and 150-week. For example, the 40-week moving average here in red for me is the same as my red 200-day moving average because 200 days 40 weeks, about the same number, very, very close, right? Because it's using daily versus weekly data, but it's meant to basically show me the 200-day moving average using weekly data on my weekly chart. And I also like the 150-week moving average as a big long-term trend following device. So what I would suggest if you're running into this issue is make a weekly chart style and a daily chart style, a monthly chart style, whatever other periods you tend to refer to regularly, and set each period up with the indicators and the tools and the periods that make sense for that particular time frame. That's how I have mine set up. So I have a daily and a weekly as my first little buttons up here. I would encourage you to do that. I never touch this here, and I would encourage you to not do that as well, because what that does is it's going to change the periods, but everything else is going to stay the same, and it's probably not the settings and the indicators that you may want to have. So I have different charts for daily, weekly, monthly, intraday, and I have the indicators that are unique to each of those periods. So thanks for that question. The people that do that with the same moving averages, I think that's a miss. That's not my favorite way of approaching this. Next question. Besides Bitcoin and GBTC, which is a Bitcoin trust, what other choices are there to participate in the move of Bitcoin? Really good question. So bad news is your options are limited for US-based investors. I'll show you how I try to look at this. I have a chart list, which I basically call cryptocurrencies, and I've taken the things that I think are important to watch. So it's a bunch of, the actual cryptocurrencies listed. We have 150 some cryptos that we have. If there's one that we're missing, by the way, that you really want to look at, just ping our support desk. It'll be very easy to add another one. We just have the ones that we started with and then other additional ones that have been requested. From there, there are a series of ETFs that have an explicit aim toward not necessarily Bitcoin, but more of a broader exposure to cryptocurrencies. And those would be things like, ARK has a Web X.0, which tends to have companies that are involved there. There's a NASDAQ, Reality Shares, NASDAQ Next Gen Economy. There's a Bitwise 10 crypto index fund. These are all ETFs or exchange traded notes or ETF-like things. But have not direct exposure to Bitcoin, but exposure to things that give exposure to Bitcoin, if that makes sense. Because there's no great way to do it. Now, if you're Canadian or if you trade Canadian markets, you're in a little more luck because there are Canadian listed Bitcoin ETFs like BTCC and EBIT, but not really accessible to US-based investors. Last option is to look at stocks that have a tie into cryptocurrencies. And again, not necessarily Bitcoin. Things would be Coinbase, of course, one of the publicly listed cryptocurrency exchanges, MicroStrategy, PayPal or Square, which are really payment processors, but have made an explicit attempt to incorporate cryptocurrency transactions, Riot blockchain, and others. So these are the things that I track that are kind of Bitcoin and things kind of like Bitcoin that I think would be interesting to watch. I would encourage you to check out some of the other exchange traded products. Just always be wary with some of these. You have to be careful about the volumes and the liquidity, right? Some of these are very thinly traded. As a result, you're going to have a tough time getting filled. The spreads might be really wide. So just like you do a normal due diligence to analyze expenses and analyze performance and all the structural things, make sure you do that with anything that's tied to a non-equity asset class. There are always some interesting assumptions that exchange traded products have to make it a product that you can trade. But this is the list of things. If you hit pause on the video and check these out, these are all things that I think would be maybe the other ways to get exposure to that theme as a longer term investor. Next question, Dave, what would you need to see from Tesla to turn bullish? So that's a great question. And so I'll start off by saying, of course, not a recommendation. Full disclosures, as always, as we tend to show on the screen at the end of the show, all here. So I'm certainly not making a recommendation on anything like Tesla. But I guess maybe to rephrase your question, what would it take to turn more constructive on the chart or to turn more bullish? So here's the thing, right? What I used to work with portfolio managers way more often, my time at Fidelity, right? I worked with a lot of money managers. And even before that, when I was with Bloomberg and elsewhere, I'd work with a lot of institutional investors. One of the things I would do is take a chart like Tesla and other charts maybe that have had longer runs, something that is maybe rotated from a bearish phase to a bullish phase, and ask them to show me where on the chart they would feel comfortable buying it. Because, would I be happy buying Tesla here in late December? I wouldn't, right? And generally speaking, and I'm generalizing here, because my goal is not to buy severe weakness. That's more of a value-oriented mentality when you're buying things that are very undervalued relative to their intrinsic value by some way that you would measure it, maybe some valuation metric, some ratio, or maybe just the fact that it's down so much that you feel like it's undershot where it probably should be trading. That's not the style of investing we tend to talk about or we tend to highlight, although I've known many investors that practice that sort of approach and do very, very well. The challenge with buying stocks on the way down is you will often be wrong. And as a result, you need to pay real good attention to a money management discipline to make sure that if you're buying here in October or November or early December, that you have some way of exiting that if it's not going to work. Hopefully you bought it right at the bottom, right? But it usually doesn't happen that way. So then the other option, which is more how I would approach it, is buying when things have started to turn higher, which means something like the RSI becoming overbought. That's sort of your leading indicator that a bottom might be coming. what would I look for that would tell me to be more optimistic? It would be something like a trend following tool like PPO. It would be something like the MACD obviously is very, very similar to that. The RSI doing a bullish divergence. Tesla not just making bouncing off the low, but making a higher low. That particular thing is what I would be looking for with something like Tesla. Is it possible that we make a big V and it goes back to 300? That is certainly possible. I would describe that as highly unlikely, because more likely is that you have a rally and there's some profit taking and you get that higher low. What's interesting is that's what you're seeing on a lot of the other charts that we featured earlier. Some of those healthcare charts like IDXX have that higher low, NVIDIA making that bottoming pattern with a higher low. That's what I'm not seeing yet on Tesla. For me, that's what make me more encouraged to look at a chart like that. 4 fantastic questions, guys, and please keep them coming. We'll answer more later this week, but we need to wrap the show. Let's go to the 3 and 3, 3 charts in 3 minutes that tell the story of this market environment. Here's chart number 1. Hallelujah, we can celebrate the fact that the S&P has gotten above this trend line. We've been talking about this trend line for a while now, probably since August was when we first highlighted this, because all of a sudden we had a really clear line of trend. And when it retested that in November, December, I was hooked on the value of watching this as a great representation of the downtrend. The higher low in December was maybe a sign that we were reversing, but what we did not have was that follow through to the upside. Today, we are closing above that trend line that I've drawn. And as promised, you're probably hearing a much more encouraging, much more constructive take on the market environment because of that. And there you go. What would I like to see now? I would love to see, to complete that bullish rotation, follow through tomorrow, which would sort of validate what we saw today was not just a one-off thing. Getting above 4,100, taking us above the December highs would certainly complete that. I'm doing the same trend line on a closing basis just to show that using the closing prices, it lines up pretty well also. And also, as of today, we've closed above that level. So the same thing applies. Do we get the validation tomorrow? And do we close above 4,100? But for now, I think the benefit of the doubt is positive. I think the path of least resistance appears positive based on the strength getting above that trend line. Chart number 2, First Solar. This is the top ranked stock at the moment in our large cap scooter rankings. Scooter rankings are a really cool way of looking at a big universe, ETFs, industries, large, mid cap, whatever universe you want to pay attention to, and seeing which charts are stronger than the others. First Solar, using our ranking system, has the strongest chart. I like the fact that it keeps making higher lows. I like the fact that it pulls back to the 50-day and we revert higher. There's only issue I have with this chart. It's this bearish momentum divergence that I see building. Higher highs, September, November, January, lower peaks in momentum all during that stretch. So ideally, you see the price continue to go higher. You see this bearish divergence alleviated as we get above that trend line using the previous peaks in the RSI. Finally, Seagate Technologies, STX. We highlighted this as one of our 3 and 3 charts one of the days last week, maybe Wednesday or Thursday, if I remember right. And I brought it back saying basically I was skeptical of a growth stock like STX getting above this clear level of resistance and not being able to follow through. And on the day we talked about it, it had actually closed right back at that breakout level. Today, after Friday's rally, we're pushing off of that level. This is just a classic rotation, I think, from downward phase to consolidation to accumulation phase or bullish phase. I like the breakout. I like the improvement in momentum. I like the improvement in relative strength. Charts that are breaking out and following through deserve our respect and our attention. Folks, that's a wrap for today. I want to thank you so much for joining us every weekday after the close for the final bar. As a reminder, we're making some changes to the show, improvements. We're going to be in our studio soon, but one of the things we've done is plotted some more time for each of our guest interviews. So make sure you tune in Tuesday, Wednesday, Thursdays for 3 great conversations with lots of time for Q&A. All of our previous interviews can be found at StockChartsTV.com. For StockCharts in Redmond, Washington, I'm Dave Keller. Be well, be safe. We'll see you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.